Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and Borsog trading. If you're new, a very warm welcome and welcome back KS family. And please note, I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. ADP non-farm employment change came in hotter than anticipated. Also, unemployment claims were far less than anticipated as well. I'll just pop into my Twitter feed to share some charts with you. We saw yesterday that the labor market remains very tight. In the US, there are about 1.7 job openings for every unemployed person in the country. We also saw CEO confidence just falling off a cliff, literally. Ensured unemployment is on its way up in terms of averages. Seasonally adjusted initial claims, that's first-time filings for unemployment, you can see it's actually been falling for quite some time. This is a reflection on the very strong labor market. Companies added more jobs than forecasted in December while the jobless claims fell to their lowest level since late September. We talked about the other economic data, the JOLT job openings yesterday, and the ISM manufacturing PMI, and of course the FOMC meeting minutes were released. What's the bottom line of that? The FOMC said we're not pivoting. As anticipated, we're going to see a lot more volatility in the markets. This is very difficult for investors, but very profitable for traders. We can see here that the SPDR S&P 500 ETF Trust has in fact sold off since it spiked. Post-market, it's currently 379.73 cents. It's below a smart money sell level at 380.63 cents and a higher one above that at 382.80 cents. All the charts marked up here are done with CTKS Method Standards Certification, and we can see the next level of smart money buy or smart money support inside the market is 375.60 and 375.33. It's very important to understand how the major indices are moving, and the S&P 500 is the key one we need to look at. When we look at the 9 sell-offs and recoveries in the S&P 500 since 1966, any movement towards 37.48 is quite constructive. It's just price moving in a wave. But if it gets below 35.77, I believe the markets will be in trouble. The SPX is currently 38.08. When we look at the smart money buy and sell levels on the SPX, we can see that the SPX is under two smart money sell levels, one at 38.11 and the other one at 38.12. The CTKS method marks up charts in a unique manner. It looks at all of price action, not just recent price action. It seeks to find the true support and resistance levels that are impacting a specific asset through what is called ODMS, Objective Dynamic Market Structure. It takes all the guesswork about how to understand where price will be supported and where it's collapsing. And what we see here at the moment is the markets are just hanging on for dear life to that 38.11, 38.12 mark. The next smart money support or buy level is actually at 37.81. If you go across to www.ctksmethod.org, you'll see the particular certification levels, level 1 and level 2 certification. If you pop into level 1 certification, you'll gain an understanding of what you actually need to do to mark up a chart. And then if you go across to level 2 certification, you'll see actually what comes next. Marking up these charts is a bit of hard work, but the concept is it's really worth it if you know what to do, if you know where the support and true resistance actually are inside any specific price chart, and you can apply this to anything. It just creates so much confidence in what you're looking at because you're looking at what smart money looks at. To all the people that have registered for the CTKS Method service, please, by the email that I sent you when you actually registered, let me know what stocks, what cryptos, what metals, what you actually want to see marked up. The concept behind the service is that I want to make it as valuable to you as humanly possible. Please let me know what it is that you would like to see marked up. And if you would like to register for the CTKS Method service, you can just pop in your name and email and lock in that discount. All it does is lock in the discount, nothing more. It's critically important to understand the interdependencies that exist between charts. A lot of times people just say, trade the chart in front of you, but that's really, really bad advice. All charts are intercorrelated and interconnected. When we look at unemployment claims, the fact that we had actual less than forecast is bullish for the US dollar, and the same with non-farm payrolls. Both are very bullish for the USD. So let's have a look at the USD. Let's have a look at how it's playing out. And why do we do this? Because the US dollar actually impacts crypto. It impacts all markets globally. What have we seen in the DXY? With the release of this economic data, it's throwing pressure on the Fed to increase the federal funds rate. What is that going to do to the yields, the 2-year, the 5-year, the 10-year, the 30-year? It's going to raise them. And we can see that the DXY did in fact take off, but where did it take off to? And this is the key level. We understood that back here we were under two smart money sell levels at 104.423 and 104.433, and when the rally came, it got stuck at these heavier smart money sell levels at 105.096 and 104.827. The beautiful thing that the CTKS method actually does, it helps you to understand where the market structure is, and this is not based on recent price action. This is based on all of price action. The DXY is currently trading at 105.123. We can see it's made its way above this smart money sell level and converted it into a support level. That level is the 104.827 level. It's also seeking to turn the 105.096 level into support. If it does so, the next resistance level is 105.593. What typically happens when people look at any financial instrument without the CTKS method? It becomes really difficult to understand where the smart money are buying and selling, not where retail are buying and selling. Retail buy and sell off recent indicative price. And if you've ever actually suffered losses, it's probably because recent indicative price has played out on your charts. There are two forces within all financial markets: smart money and not so smart money, retail money. Smart money knows what they're doing. Retail, not quite so much. If you want to know what smart money knows, just simply pop across to the ctksmethod.org and start marking up your charts with the CTKS Method Standards Certification process. And we can see that the markets are reacting to this economic data. Led by the 2-year yield, we can see yields are actually starting to turn up. As yields increase, the stock market has often inverted. And we're finding a tighter and tighter correlation between increasing yields and decreasing asset prices. It doesn't always hold as true, and this is something to bear in mind. You have to be really aware of simplistic relationships in financial markets. They literally do not exist. Masterclass students, you get my live chart in LV24. Even though we're focused primarily on the crypto market, you must be aware of currencies. You must be aware of bonds and yields. You must be aware of the major indices. Why is that? Because we are professionals. We're not retail. When we look at the euro versus the US dollar, we can see that inverse move playing out on the euro. We can also see that the euro is under a lot of levels of smart money sell resistance. And the euro is currently 105.212. Masterclass students, in TM6 you get my live charts here. Within the next week, I'll be reaching out to the awardee of the Jason Rice CTKS Partial Masterclass Scholarship, the first scholarship of 2023. If you are interested in getting a partial masterclass scholarship, the link to apply for this is in the description of this video. The CryptoTradingKS Masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis using the CTKS method. And that's a method of technical analysis that I invented specifically for crypto that accounts for exponential implosions and explosions in price and updates normal stock market and forex technical analysis. The masterclass is time released and always updated in the LV section, the living video masterclass section. So I'm always keeping you updated with what is happening inside the crypto market. But it's not just the crypto market, it's the stock market, it's forex, it's everything, because they're all interconnected. And we do deep dives into specific things inside the masterclass. When we look at the VIX, the fear gauge of the main market, we can see a change in trend here, a higher low. We could get a very big spike in the VIX. It's long overdue. Now, what is the consequence of that? If the VIX actually starts to spike, we will see the market start to come down. And if it spikes dramatically, we could see a dramatic sell-off in the markets. This thought can be really terrifying if you're just newly into the markets. What you actually do is use the CTKS method on your charts, and you'll know where the strong support, the smart money buy levels and smart money sell levels actually are. Looking at the NASDAQ 100, we can see that it's sold off. Looking at bond prices, they actually have been rallying up and bond yields have been retracing, but all price moves in a wave, so it's very, very early to tell which way the bond market is going. In all likelihood, if yields start to increase, mathematically bond prices must come down. They must come down because of the mathematical association between price and yields. And we talk about this a lot inside the masterclass. So just be aware of this interdependence. Gold is typically very sensitive to the DXY, and we can see when the DXY rallied, gold came down, but there's always internal structure that overrides these associations. So you must not have a simplistic view of the market. Just mark it up with the CTKS method. We had a look at the immediate levels on the DXY, and I've been saying for quite some time, since back in late December, that the DXY is starting to bottom out and starting to change trend. Let's see where it goes. If yields start to explode upwards, that is a very big possibility that what we'll see is quite a rally in the DXY. The central banks seem hell-bent on actually destroying their own economic systems. This, unfortunately, is related to economic principles, and economics is based on the science of scarcity. In our community, our global family, we don't believe in scarcity. We believe in Zone 3 and Zone 4 thinking, especially Zone 4 thinking. Hopefully, our level of thinking will reach economic policy decision making, because it really needs to. We can see that oil has just been suffering a bit of a retracement. It's looking like it's finding a bottoming pattern here. It may spike up. But always just look at the CTKS method to see where the true resistance and true support are inside the market. When we look at junk bonds, and this is a very risk on or risk off indicator, we can see that the risk on has been flowing back into the market. All prices, all indicators move in waves. Let's have a quick look at Tesla, because Tesla is quite a community favorite. But first, I wanted to read something from Art. Art, thank you very much for your kind comment. Art says, "For the last 10 years or so, I've gotten more serious about my trading, and now with the CTKS Masterclass and especially Level 1 and Level 2 method, I have all the confidence I need to survive any situation. In the last 2 weeks, I've had 5 trades earning more than 10%. The median performance of all mutual funds are lucky to track 10% in a year, let alone 2 weeks. I'd like to speak specifically to I have all the confidence I need to survive any situation, and thank you so much, Art, for your very kind comment. The first thing to understand about the CTKS method is that it's formed through objective dynamic market structure. The dynamic means that each specific time period, the relevant time period, the lines will shift, they'll change. And the smart money is looking eagerly for these changes. We can see currently with Tesla is trading at 110 and 13 cents. Post-market, it has some very strong support levels at 98.45 and 98.22. There's also a lower one at 93.93. There's also a very strong resistance level that's now emerged at 115.69 and several above it at 141.39 and 143.27. Having this capability to know where smart money is actually looking and will buy and sell at those levels is just magnificent. It literally gives you the confidence that Art spoke about, and that's what Art was actually speaking about. I know in past trading sessions, Beardy did very well from Tesla. Well done, my friend. And please note, traders are always taking profit. We can be on the wrong side of the trade and on the right side of the percentage and do very, very well, just like what Art said. We're going to get choppy markets for the next couple of years, so learning how to trade is very, very important. Turning our attention to the crypto market, we can see the market has still maintained its range-bound performance, oscillating between the smart money buy level at 16,812 and the smart money sell level at 16,889. Bitcoin is currently 16,845. Turning to an analysis on Bitcoin. At the present time, oscillation between these two smart money buy and sell levels, 16,812 and 16,889, that's positive. If we start to break below 16,793 up to 16,666, that's potentially a neutral case, but it's not as positive if we just actually break above the 16,913 level up to 17,000. A break above 17,000 would be very positive for Bitcoin, but a break below 16,665 or 16,666 is not so good. We would expect more negative follow through, and this is how dynamic the market actually is. Looking at the top 16 crypto, we can see over this period of time that Bitcoin has come up 1.39%. Ethereum is up 4.83%, and this is why we love the alts. The alts move in directional correlation with Bitcoin. You can see that blue line in the background, but the alts typically move much, much more. And that's exactly why so many people invest in the alts and trade the alts, because they've got greater volatility, but they also have a lot more volatility to the downside. When the plus side is coming, we're really happy, but when the downside is coming, not so happy. We've been keeping an eye on the stable coins, Tether, Circle, and Binance USD. Let's have a look at BNB. It's up 5%. So we can see that directional correlation exists between the alts and Bitcoin. XRP is following roughly in Bitcoin's directional bias. And don't forget, directional bias means when Bitcoin comes down, XRP is likely to come down. It doesn't mean that they move at the same percentage. Not at all. We don't want that. We want the alts to outperform Bitcoin. But we've seen XRP is getting a little bit weaker in terms of the pack. And what about Doge? Doge has been rallying strongly, up 7.07%, but it's starting to weaken out. Turning to the next 8, we can see ADA just mapping Bitcoin's volatility upwards and downwards very, very nicely. Well done, ADA. Well done, Charles. Matic, we can see it following in the footsteps of Bitcoin, but becoming a little bit weaker, just like what is happening to XRP. DAI is a stable coin. When we look at Litecoin, Litecoin has been an outperformer, absolutely. It's done very, very well. And we can see it following in the directional bias of Bitcoin, just mirroring those movements, both up and down. DOT also and it's done really well, up 8.4%. And what about Solana? Just a standout, but Solana got absolutely crushed with the FTX saga. We can see that Tron is starting to sell down quite traumatically. Justin, what is happening? And SHIB just moving in alignment with Bitcoin's gravity, but we can see a lower percentage increase than was Doge. As a global family, we focus on positive excellence to give us a sustainable experience in life, one of fulfillment, meaning, happiness, and success. You can think of each of these green words as a to-be list. To be persistent, to be committed, to be generous, to be selfless, to be a learner who has humility, to be courageous, to have honor, to be respectful, to be forgiving, to be kind, to be grateful. These to-bes are all the actual foundation of success, and I'm talking about sustainable success. People like Sam Bankman-Fried. He was successful, very successful, and he successfully committed one of the biggest frauds in history. And now he will be successfully locked up. History is full of people who just focus on money. They think that money is success. Money is not success. Money is actually a byproduct of success. As a global family, we exist to lift people out of Zone 1 and Zone 2 into Zone 3 and Zone 4. When people live inside Zone 1, which is the panic and entitlement zone, and Zone 2, which is the blame, conflict, and jealousy zone, they have a terrible experience of life, an adversarial experience. They think everybody is out to get them because of a win-lose mentality. Zone 3 and Zone 4, especially Zone 4, is completely different. That's where we master fear, but also we master scarcity. In the comments yesterday, I said if you had $10 million to invest, who would you give it to invest it for you? And the correct answer was no one. You would do it yourself because you'd have the knowledge to do it, just like Art's comment said. Thank you, everybody, for your fantastic comments. Kate and I are so appreciative that we can spend this time together each and every day. It's just beautiful. I thought a really good question for today. If you had $1,000 to start trading with, how would you actually allocate that $1,000 to trade? It's a really good question, and I'm looking forward to seeing what you share with our beloved global family. Our goal is to break out of Zone 1 and Zone 2 into Zone 3 and Zone 4. And when you get to Zone 4, you have to guard against sliding back into Zone 3, Zone 2, and Zone 1. It can happen. We know that all results come from the mind, and a better mind creates better outcomes. That's why we have daily positive affirmations for abundance, financial success, meaning, and happiness. And that is through the CTKS Creed. A positive affirmation is simply a statement that begins with I, or it's got I somewhere in it, and you basically say I something positive, because it's really important to get your mind thinking from a positive stance. Inside Zone 1 and Zone 2, it's all negative. It's all broken glass and barbed wire. That's why daily positive affirmations are so incredibly important to rewire your thinking and to keep it rewired, because you always have experiences in life where you will come across Zone 1 and Zone 2 people, and they will want to drag you down into the barbed wire and broken glass where they live. Let's go through the CTKS Creed. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I never let a problem beat me because I solve it with positive excellence. These positive affirmations will set the compass of your life to a positive direction. Knowing that life wants you to succeed is very, very important, and every day showing kindness, integrity, and gratitude will be a game changer, not only for yourself, but for all the people around you. And knowing opportunities in life reset daily, even if you have a setback today, hey, life is resetting. It will be better tomorrow because you will make it better. If you have friends or family who could benefit from positive excellence and what we do here each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Stay safe out there, my friends. Take care and see you tomorrow. Bye for now.